Yeah, one of the first pros and cons. Well, of course, the first, if you want to get into pros about a portable mortgage, as we all just, me and Jeff just talked about, of course, the first thing is the biggest benefit or pro is that you get to take and keep that low rate mortgage and move it to the next house that you're going to acquire. That's obvious, right? We just talked about that. Well, what's another pro to having a reverse mortgage? Well, not so much here in the U.S., but again, in some of these other countries like Canada, like the UK, prepayment penalties on mortgages are common. In fact, almost a majority of the time, when you get a mortgage in the UK or Canada, you are going to have a prepayment penalty. And some of those can be as much as 3 to 5 years. So, one of the benefits of this portable mortgage idea and why it does get used in a limited fashion in some of these other countries is because if you have that low rate mortgage and it does have a prepayment penalty, well, then guess what? If you're allowed to move that mortgage to the next property that you're going to purchase, uh, you don't incur the payoff penalty because you haven't paid off the loan. You've simply moved it from one property to another. So it can save you quite a bit of money by avoiding the prepayment penalties that are already built into that mortgage that you want to move from your current home to your next home. And then the other thing is, it can help you in terms of making the move more quickly. The reason being is that if you already have a mortgage on your house and you're going to sell it and you're going to take that mortgage and transfer it to the house you're buying, well, if you think about it, you're not going to have to go through the new loan process. You're not going to have to go through applying for a mortgage, putting all your documentation together, get it underwritten and approved. That piece of the process is essentially eliminated because you're not getting requalified for a new loan at current rates. You're simply taking an existing loan, moving it to the new property, and that theoretically should help, you know, accelerate the process of getting your current home sold and buying the new one, because you basically, bypass that loan qualifying and loan underwriting step